morning members. This is the next video in the series of recent exam MCQs of 2026. So I humbly request you to please go through all these MCQs because some of them are going to be repeated in your exams. After MCQ videos, we will have the case study videos also, which are new case studies. So be with this channel and subscribe and press the bell icon so that you will not miss any update. So without wasting any single minute, let's start the discussions for the day now. The first question in the series is bill of lading is a letter or document of title to the goods. Next. DLOM, discount due to lack of marketable, is generally applied at the, now we all know that DLOM, there's sometimes asked in the exam the formula for DLOM, sometimes the formula asked for control premium, etc. So this is basically called as discount due to lack of marketability. But here the question was twisted in the exam that they are not asking you the formula that 1 minus 1 upon 1 plus control premium and all, but they asked you that at which level of valuation you will apply this formula generally. So practically speaking, sometimes this is applied on enterprise level also, sometimes on equity level also. But for exam purpose, more appropriate answer should be equity level because equities are more traded and less traded in the private companies, in frequently traded in the public limited organizations, right? Or public limited companies or the listed companies, right? So more appropriate question of marketability arises on equity level. So this is more appropriate answer for this, that is equity level. Cash flow from investment decisions generally indicate long-term assets and liabilities, long-term debt and equity, working capital movement. The correct answer would this would be long-term assets are created under investment activities. Scope of valuation engagement excludes identity of the client and stakeholder, responsibility of the parties, due care, asset to be involved. The more appropriate answer should be identity of the client and stakeholders, not discussed in the scope. Right? Scope basically covers the responsibility of the parties, due care, assets to be valued, etc. Exercise of employee stock option generally result in, the more appropriate answer in this will be EPS rise, no. Existing shareholders gaining more control, it is not the case because existing shareholders are not given the ESOPs, they are given to the employees. Increase the number of shares outstanding causing possible dilution. If let's suppose earning is same and number of shares or denominator is increased, the EPS dilution will be there. So C is more correct answer. And information utility under IBC primarily stores the financial information. Next. Ind AS 109 deals with the financial instruments. Under Ind AS 36, impairment during liquidation is generally assessed with reference to initial recognition amount, historical value, market value, recoverable amount basis, or face value. So it is more of the recoverable amount basis. Ind AS 113 deals with the revenue recognition, impairment of asset, lease accounting, or fair value measurement. We all know it deals with the fair value measurements. Next. Cost of an intangible asset includes research expenditure, cost of introducing a new product, cost of introducing a new service, directly attributable cost to prepare the asset for its intended use. So cost of an intangible asset includes all the items which are explained in the D. Next. While relying on the work of another expert, the registered valuer should evaluate the expert's knowledge only, connections only, no, popularity in the market, no. C is the most appropriate answer, professional competence, capability, and objectivity. He must ensure that he is capable enough to do that valuation or not. The Burkus method focuses on qualitative values drivers in early stage ventures, lead conversion ratio only, historical profit generally in startup, historical profits are not there, discounted bonds valuations are not there, lead conversion ratio is not there, qualitative measures that were how sound the idea is, how good the management team is. So these are all the qualitative measures which are concerned under Burkus method. Which of the following is not a benefit of commercial paper? These are short-term money market instruments, not a long-term validity, right? So this says it is a benefit short-term source of relatively cheap credit. Investors may earn more than generally more than FD is available. It is not the 100% again, but generally the commercial paper provides more than the FD returns. It is available to all companies regardless of the credit, but this is not the correct answer, right? So there must basic credit worthiness must be there, right? Prepayment option generally gives the borrower the right to extend the maturity compulsorily, repay the loan earlier than scheduled, convert debt into equity automatically, that is conversion option, suspend interest permanently. No, the correct answer is repayment option, or prepayment option gives the right to prepay the loans. Next, binomial model tree, pricing tree, the second stage is generally recognizes the multiple pricing options, right? So possible upstate and downstate pricing. If one variable is shown on one axis and multiple scenarios valued at set on another axis, it is generally called, sometimes this question is asked with the Monte Carlo simulation technique also. If it is called multi-simulation or Monte Carlo simulation also, right? So if in exam it will be there, let's suppose multi-simulation is not there, then the answer would be Monte Carlo simulation, right? Reproduction cost means cost of creating an exact replica of the asset, and cost of creating a similar utility is not the similar utility, but the reproduction means the same exact replica if you have to create. In insurance valuation, one important basis relates to all existing policies and actual liabilities under policies. So valuation depends upon how many current policies are there and how much is the what you can say, the actual liabilities, possible liabilities against that. That is the major use or major content for valuation of insurance companies. In the Mafatlal matter, where material litigation was not disclosed, the Supreme Court held that the objection of the minority shareholder was not justified. Under DTAA, where income is taxed at a special rate, not a normal rate, but special rate, then the Chapter 6 deductions are not available, cannot be claimed. Chapter 6 deductions cannot be claimed. SARFAESI primarily deals with the security interests. Valuation primarily relies upon management alone, information data made available subject to valuers analysis and professional judgment, market rumors and auditors' opinions only. It is this information and data made available to the value. Next, valuation is generally not required in takeover, martial dissolution, every routine internal management decision, major consideration. The more approved answer is C. Normal routine works will not require any sort of valuations. A key difference between fair value and fair market value is that fair market value is a market related concept. Fair value is valuation related concept. Fair value is a broader accounting valuation concept, where fair market value typically assumes the hypothetic willing seller in an open market. No tax on technical services by central government is applicable to non-resident, resident but not ordinary resident, non-resident in foreign jurisdiction, no accrual in India at all. Right. So these were the questions in this series. I hope you have done that correctly. If again having any doubt or I have made any mistake in answering any of the questions as per your opinion, please do let me know in the comments or on the number flashing on your screen. Do update me and study well. In the series of these MCQs and case studies, new questions and new case studies will be there. So be with me, subscribe the channel if you have not done yet. Thank you so much. Have a great day ahead.